This is Optimal Finance Daily, episode 1149, The Pros and Cons of Paying PMI, by Vekevia Tillman-Jones with financialfinesse.com. And hey again, everybody, I am Dan. I'm your host here on Optimal Finance Daily, and this is where I read to you from some of the best personal finance blogs on the planet. Today I'm going to keep this intro nice and short for you, so let's get right to our post and start optimizing your life. The Pros and Cons of Paying PMI, by Vekevia Tillman-Jones with financialfinesse.com. When I first graduated from college, my plan was to rent for 1 year and then purchase my own home. When I look back at my financial situation at that time, I didn't fall into the perfect financial scenario of homeownership. I didn't have a 20% down payment saved that would have helped me avoid having to pay private mortgage insurance, PMI, and I was still establishing a credit history, so my credit score wasn't very high. I still purchased a home. I've found that there are many others in that same boat. For various reasons, they don't have 20% saved and/or their credit score isn't what they would consider stellar, but they aren't interested in renting for very long and still want to achieve their dream of homeownership sooner rather than later. This is where PMI often comes into play. PMI is there to protect the lender in case you default on your mortgage. What it means to you is that your mortgage payment will basically be higher than it would be without PMI. Having a higher credit score and at least some form of a down payment, like 10% down, could make your PMI less expensive. Should you wait to buy a home until you can avoid PMI? Some people prefer to do so, but others go ahead and buy the home. Here are the pros and cons. Pros of PMI. 1. Allows you to buy without using up all your savings. We all start off in different financial places. You may not have an inheritance, a large salary, a parent or a family member to get a payment from, or you may just not have the flexibility in your budget to save 20% of a home's purchase price without compromising other savings needs, etc. It could take some people years to build enough to put 20% down on a home, and in the meantime, that person might have to rent when they prefer not to. PMI can help you get there sooner. 2. Opportunity to build wealth sooner. Real estate values can fluctuate, but long-term, odds are that you will see the value of the home you purchase increase over the years. Eventually, you may be able to tap into that equity by selling or obtaining a line of credit to accomplish another goal, etc. 3. You still keep control of your budget. There's a trade-off. Some people look at PMI as simply a cost to build wealth. If this is you, you might look at it as just another line item on your budget sheet. Make sure you factor PMI when determining whether your total mortgage payment fits within your housing budget. 4. You may be able to deduct the cost on your taxes. Congress still allows mortgage insurance premiums to be deductible as mortgage interest on your taxes. Be sure to stay abreast if tax laws eliminate or reduce your ability to claim this deduction, but for now, this falls in the pro bucket. Cons of PMI. 1. Forego the opportunity to save or invest that money instead. So let's say your PMI is an extra $100 per month. You could take that extra payment and invest it instead over the long term, which would help you to accumulate quite a bit in savings. This is very true, but is that what you would do with the extra $100? 2. Increases your monthly payment. To offset the cost of PMI, you could decrease spending in another area. You might spend less on a depreciating asset like a car, or cut back on how much you spend eating out or on your cable bill. 3. PMI can last for many years to come. PMI will be there until you reach 78 to 80% of the loan to value of your home, 20% equity, or refinance if the cost to do so isn't higher than the cost to keep PMI, depending on the terms of your loan. As you make payments while the value of your home increases, you may find yourself getting closer to having that 20% equity sooner than you thought you would. Keep in mind that the 20% equity is based on the home's original appraised value when it comes to determining whether you have reached that 78 to 80% mark. So in order to take advantage of any increase in value since you purchased, you'd have to refinance to rid yourself of PMI sooner. Also, as your financial situation gets more flexible, you might be in a position to add extra payments or a lump sum to your mortgage to help you get rid of PMI. The bottom line. If you can save enough to get 20% down, that will save you on your monthly payment, and you can put the money you would have spent on PMI towards another goal. But if homeownership is important to you right now, and being in a position to avoid PMI doesn't work for your situation, don't be discouraged. Consider your budget and these pros and cons so you can make an informed decision. It was worth it to me. Check to see if you qualify for a first-time homebuyer down payment assistance program that offers financial support that can be used towards the down payment and closing costs. Some plans count those funds towards that 20% requirement. You may also want to look into other programs like NACA, NACA, which don't require a down payment, closing costs, or PMI in order to purchase a home. You just listened to the post titled The Pros and Cons of Paying PMI by Vekevia Tillman-Jones with financialfinesse.com. Now, is your home Wi-Fi struggling to keep up? Can it handle streaming and gaming, video conferencing, and homeschooling? What about all at once? Sounds like it's time for a Wi-Fi upgrade. Bring your Wi-Fi up to speed with Orbi Wi-Fi 6 from Netgear. Wi-Fi 6 is a whole new kind of Wi-Fi. It's the latest tech that gives you the fastest speeds possible, even as you connect more and more devices throughout your home. That means you'll be able to stream without buffering, eliminate lag while gaming, and connect more devices to your Wi-Fi than ever before. It's like upgrading your Wi-Fi to first class. If you're ready for the best Wi-Fi ever, you can get it today from Netgear and never worry about Wi-Fi again. Check out Orbi Wi-Fi 6 at netgear.com/bestwifi. That's netgear.com/bestwifi, and I have that linked in this episode's description. And back to the article today. The cost of that private mortgage insurance can actually vary widely depending on several factors, including the loan amount, the borrower's credit score, and the percentage of a home's value that would be paid out for a claim. If you are in the process of home buying without having enough of a down payment to avoid PMI, then please take the time to check your credit score and be aware that the lower your credit score, the higher your PMI and the monthly payment will be. Another thing to keep in mind is that if you currently pay PMI on your mortgage but believe that your home has appreciated in value since initially taking out the mortgage, there's a possibility that refinancing could eliminate that monthly PMI payment. And since interest rates are still near historic lows, as I'm talking to you now, May 2020, this may be something you want to consider right now. Okay, that's going to do it for today. Thank you so much for listening. Hope you have a great rest of your day. And I'll see you back here in tomorrow's show, where your optimal life awaits.